into your October housing market update. September was a crazy time, and well, now that it's fall, we're gonna tell you everything you ought to know. Ladies and gentlemen, it has been a dramatic September. In a number of ways, we have decreasing home prices, we have more inventory coming up, and we have a potential shock to my real estate investors. So let's dive right in, shall we? So we have been talking about the increase of the housing supply and the decreases of pricing since April. Inventory is improving as well as consumer confidence in certain areas, not necessarily all. So as the market cools, more home buyers are feeling more optimistic about the housing market. But why wouldn't you? Home buying in 2021 is arguably a lot easier than it was in 2020, not as stressful, not as competitive, and here are the number of reasons why. As inventory goes up, there is more supply that is coming into the market. Therefore, we have seen here in the Treasure Valley a pretty good reduction in home prices. Depending on where the home is, you're seeing home prices reduced by tens of thousands of dollars. As more supply comes in, that gives more buyers opportunity to take advantage of this incredible rate that we have that has stayed constant since the start of the pandemic, and that is 2020, ladies and gentlemen. 2020 is when this all went down. But unlike the market in 2020, 2021 gives a lot more opportunity to buyers because sellers are panicking when they have chosen the wrong realtor that has sold them on hopes and dreams that cannot happen in this market because it's not the same as it was last year. They're starting to freak out, and if you have an aggressive real estate agent that's like, all right, yeah, let's take advantage of it, you're able to negotiate prices that have been so high down to something that's a lot more realistic. So buyers, if you are watching this, take advantage of this. On September 7th, 2021, the NAR sent the House and Senate tax committees proposals urging the stop of messing up real estate tax incentives for investors. Here are the three things that the House and Senate are proposing to change real estate investing for investors. Number one, get rid of like-kind exchange. To me, that's interesting. Like, why does that even need to happen? You're trading a like for a like-kind exchange. Why? Number two, they want to propose an increase on the capital gains tax rate. You know, sometimes I'm like, okay, how much more are you going to tax us? Like, let's be honest. You tax us for everything you do. We've made some money on our assets and you want to tax us more? Come on, give me a break. And lastly, they want a proposal to tax the unrealized capital gains on a death of a family member for a property over a certain limit. What does that mean in non-real estate jargon? It's basically that in a state like California, for example, if your grandparents died, there's a high likelihood that the appreciation of their home is massive from the time they bought it. And what the government wants to do is, because the family member has died before they pass that asset on to their heirs, they literally want to tax them for a majority of what that appreciation is. They are saying that there are going to be levels of appreciation that they're going to tax on. So think about it as kind of like a tiered system of, hey, you know, if your appreciation is 100 grand, you're taxed at this. If it's 75 grand, it's this. Or in most cases, like a state in California where 50 years ago you bought a house for $50,000, and with how many people moved there, the appreciation, and in this housing market, let's just say it's $2 million. Your appreciation at that is $1.5 million. That's a great sum for people who are looking for their inheritance. However, Uncle Sam is now proposing that they tax you on those unrealized gains. So hopefully NAR actually writes a really good damn proposal and we start lobbying for this not to happen, because then the tax incentivizations for investors would change completely. With Governor Newsom being reelected, as well as the Delta variant showing signs of possible lockdowns again, we're going to have a second wave of people move into this state. We don't know what's going to happen with the interest rate. If the interest rate goes up, therefore buying purchasing power goes down, and the same cost that it would have been to have a $350,000 or a $450,000 home, if the interest rate spikes up even a percentage, sometimes that decreases your approval rate and you go from 450 all the way to 350 overnight just with the rate going up. So that's just something to really consider, because if that were to happen, then buckle up, ladies and gentlemen. End of 2021, going into 2022 is gonna be a crazy freaking ride. iBuying. What is iBuying? iBuying is literally buying without a realtor. iBuyer programs and companies are losing profits because, well, the algorithm isn't keeping up with what's actually happening in the market. as home prices have been increasing for the last year. Same with these algorithms. So what's happening right now is that their algorithms are lagging in data to where they're kind of buying up homes right now at very high prices and not being able to resell them like they normally do. I'm the kind of person that likes a good deal. So if you're anything like me, this is how you actually take advantage of it. So one thing I'm actually urging my clients, my selling clients to do is to evaluate going on market versus going with an iBuyer program. And here's the reason why. If you overshoot the landing, overpricing your home, stay long days on market, don't really want to get it ready, whatever it is, the iBuyer program can be extremely convenient and more profitable in a market where it has shifted so much. One thing that just actually happened to one of my clients, lifelong friends, love them so much. They were so scared to tell me that, they were entertaining an offer from an iBuying program versus listing with me as their realtor. Honestly, I was so pumped for them because the offer that they got was about 20 grand more than what I would have listed for, 1000%. But that's because of the algorithm that is there. Like, they have a house in a very highly desirable area. It's Southeast Boise, and just with how desirable that area is, the algorithm has shot up a lot, whereas the home prices are now starting to decrease. As a realtor, I feel it's my obligation and my fiduciary responsibility to tell people if I can honestly meet their expectations or if I can't. So this offer came in that was $40,000 more than something I could have listed it as. And I looked them dead in the eye and I said, you guys better take this offer and take it fast, because they are offering you way more than what the market's even saying. They're waiving the appraisal. And I know for a fact that if you tried to do anything else, it's going to be challenging because they're also giving you cash. Cash is a great bargaining tool, and well, you're getting a cash offer. I suggest you take it. So they signed the contract, and literally a month later, you start to see all of the homes that the iBuyer program that bought, you're starting to see them sit on the market more, which is extremely interesting. I think it's good for someone that is trying to cash out now and take advantage of that and then buy it into another house. But I do think that we have to evaluate all options before we decide which one we go with. And as you know, if you would like the more in-depth analysis of what's happening in our housing market, check out the Loom video linked directly in the newsletter. Dear Gord, that was quite the update. Hope you guys enjoyed this October edition of your housing market update. I'm your real estate expert, Taz Weatherly, and I'll see you next month.